Good morning, everybody. Thanks for jumping in. Good morning. We're gonna get started shortly. So, all right. Good morning. Good morning. All right, we're gonna get started. Good morning, everybody. Good afternoon, wherever you are. Please share in the chat where you're tuning in from. Welcome to the Power Hour, where the hour shall pass, but the power continues. We're trying to charge you with power so that you can continue your conversations throughout your days and your week. My name is Ricardo Betis. I am the chairman for the Global Opportunities Committee of the Atlanta Black Chambers. And the Global Opportunities Committee is focused on connecting our members to opportunities around the world, whether that's in trade, in partnership, or in investment. And when we think about opportunities, we think about connecting people to capital and capital to opportunities and also to talent, because we think that this world is not the same without the necessary talent that it needs to function. And so I have here today one of my good colleague, one of my good friend, if I may say so myself.
Yeah, you can.
We've been at it for some time, and Henry is also one of my advisors. And I thought, well, I want to introduce him to the family, let him have a quick chat. Let's pick his brain a little bit. I see some folks from Sweden here, from Europe. So thanks for jumping in. If you know someone who should be on this call, please tap them on their shoulder, let them know that we're going to have an insightful hour here in terms of discussion. So super excited. So we're going to get started. I would like to introduce you to Henry Dauphin, but he does a much better job in telling us who he is and giving us a little bit about his background. And just let's set the tone for the conversation that we're going to have. Henry, thank you for jumping in on the Power Hour. I appreciate your time here. Please give us a little bit about who you are. Tell us a little bit about the background. Henry, where did it all start?
Well, thank you very much, Ricardo. It's a pleasure. Always been very inspired by what you're building, the community and the vision you have for really bringing prosperity to the communities around the world as well too. So it's my pleasure to be here. So quick introduction. So my name is Henry Dauphin, originally from Montreal, Canada, and for the last 20 years we've been scaling tech startups. So our background's in innovation. Started after a failed startup. So that was a very interesting. So my first venture was a fashion company. Poured everything into that project, thought we're gonna change the world and becoming billionaires in like 6 months. Unfortunately, it didn't materialize. But what was interesting about that process is that me and my partners became obsessed with understanding why we failed, right? So it was a very transformative experience because we spent, and the thing we thought is that the idea was a great idea. It really had leg. It had the potential to bring a lot of values to people around the world. It was, very ambitious project. But we suspected that the tools we had implemented in transferring and translating that great vision into a business vehicle were not adapted to really be able to translate into a great business architecture. So we were looking and we became obsessed with looking for more data-driven, more quantitative approaches to formulate the right strategies for that business. Everything from picking the right name, picking the right colors, even the right logos, the right pricing, the right products, and so forth. So if you're familiar with the Brad Pitt movie Moneyball, it was kind of like figuring out a Moneyball for business, right? And which is something that's very important for most founders because most founders have to operate with real financial constraints, right? They don't come from money, they don't have great network and so forth. So our strategy was to figure out more scientific way of building businesses. So we did that for about 18 months. Again, it was very therapeutic as well to be able to identify the reason why we had failed. And on the back of that process, we launched a startup advisory firm called The Refinery. So the vision with The Refinery was to be able to find great founders all around the world that had very, very compelling missions. They want to change the world, but they want to create very viable businesses and to partner with them and leverage those processes for them to scale, right? So every startup since day one had to have that social utility. It had to be good for society and so forth. So we started in Montreal and Toronto with the refinery. Then we started working with a lot of investors that were looking to deploy capital in early stage, but needed help in their portfolio construction and investment thesis. And then we also started working with a lot of universities that wanted to find better ways to commercialize innovation. And then ultimately as well too with economic development offices, governments looking to leverage entrepreneurship innovation as a means for growth and prosperity for their community. So we did that 5 years in Canada, then 10 years in the US, everywhere from, Denver to New York and so forth. And then the last 5 years focusing a lot in Europe, in the Middle East as well too. We're very, very excited about the work that we're doing in places like Qatar and now starting in Saudi Arabia. So that's what we did on the innovation side. And on the back of also that, we launched an economic institute on human development. So really focusing on human potential and how to harness, because part of the thesis with the Gefta Institute is that the most valuable resource and asset that any community has are its human capital, right? The human assets. So with the Gefta Institute, we do a lot of basic research on that, do a lot of community projects where we'll partner with local stakeholders. And then also we still continue to support ventures that we deem and qualify as prosperity ventures. So basically this kind of like gives you pretty much the context as far as my background and what we're doing.
Yeah, no, thanks for sharing that, Henry. And so a quick step back, just if you can just describe like, who is a founder? Like what exactly or who exactly is a founder? Or if you're a business owner or you're a founder, can you talk a little bit about that? Because I know people on the call might be saying that I'm not a founder, like I'm a CEO for my company. Can you talk a little bit about who exactly is a founder? How do you describe that?
Yeah, so for us, it's really looking at kind of like the impact that you're trying to do, right? And we always say that we favor mission-driven founders, founders that are domain experts, right? They've been, doesn't matter what the industry and so forth, and they've identified ways to be able to achieve, let's say, efficient and economic efficiency, right? And not just that, right? When you say founders and mission-driven founders is because they've seen that in the delivery of that vision and that mission, they're able to create value add for stakeholders at large. So for us, it's really in terms of the scale of the idea and the scale of the innovation, and really coming from a place of expertise. It's not to say that we don't work with young people, but for us, the definition of a founder, it has to have a measure of lived experience, right? And wanting to use that to be able to benefit. So yes, there's some economic there's an economic imperative where the business needs to make sense. But the truth of the matter is that the mission is meant to deliver efficiency and value to stakeholders at large. So that's kind of like, and again, that's our preference in terms of how we see those founders. But if you do have those traits, for us, you're a founder. So it doesn't matter how big the company is or how early in the process is as well too. But if that's the perspective, really, in terms of deploying your circle of competence to be able to benefit stakeholders at large in a way that's economically viable and efficient, that's a founder for us.
Wow, so that's powerful. So you're saying that I've got to have a certain level of competence. So
Yeah,
that's got to come from somewhere, whether my experience that I have had, so if I'm 20 years old, how does that shape
yeah,
in your mind in terms of my level of competence versus if I'm 40, I might have gotten a little bit more seasoned, as we always say.
yeah,
And that needs to tie into a problem that you can actually solve to benefit a large group of stakeholder around the world. So that's very interesting the way you look
yeah.
at it. It's almost like a trifactor effect: competence, that sort of problem solving, and then that sort of ability to distribute that worldwide. No?
Absolutely. And you know, a business is an experiment. You're conducting an experiment. So your understanding of the world, your understanding, you know, in terms of the assumptions that are part of that experiment are critical. So that's why experience does make a big difference, right? In terms of understanding how that idea, once transposed into real world, will be able to take roots, will be able to outcompete alternative offering and so forth. So that's why the perspective, you know, I know there's a big stigma, or at least in terms of the archetypes that are being presented, the young, Stanford dropout and so forth. But having traveled all around the world, work with founders all around the world, you understand in terms of value of insights, value of ideas, in terms of their global potential, in terms of all that stuff as well too. Seasoned individuals, right? Those domain experts carry the best disruption and innovation, bar none.
Hmm. And so how does that, and I want to connect that to capital.
Yeah,
That's kind of like the foundation
yeah,
to attract capital. So
yeah.
let's talk a little bit about how does that bridge and morph into capital raising and getting access to capital.
Yeah, so there's a science to fundraising, right? And that's one part as well too that we see there's a lot of work that needs to be done in terms of understanding how to undertake the fundraising capabilities because the first thing is being aware of what your starting point as a founder, right? Looking to secure capital and also how you'll be perceived by the allocators of capital, right? So there's a handful of people that even with unpolished business models, because you know they have the right last names, they come from the right schools, they're familiar archetypes to the allocators, and often is because there's close proximity to these allocators. So, for example, if you're Stanford dropout, for example, that's a known that's a known sort of model, right, for fundraising. And if you look obviously of the background of a lot of the allocators, there's a lot of similarities. So these people, for example, that fall in that segment, they don't need to have a very polished. They can lose money for 10 rounds and so forth, and still be able to raise money. The reality for most people is not that, right? The reality is that, you know, if you're a single mom from Kansas, that's an unknown commodity in terms of the investment world. So your journey to capital procurement will be very, very different. And that's very important to understand that because if you know that there might be some biases against you or some difficulty accessing capital because of whatever those factors are, you need to build your company differently. And one of the exercises we do with a lot of our ventures is we test them and we challenge them on understanding what are the capital requirements of your company. So not just one round, right? But if you're looking at the full trajectory of your business, how much capital will you need to be able to materialize your vision? And that exercise forces them to think beyond the mere, you know, the current round, but also to start thinking as an investor as well too. So if you're looking at in the most ambitious, right? If you're looking at your vision fully actualized, you know, and so forth, and you look at everything from, you know, your product requirements, your market acquisition strategy, your partnership, how much money literally would your business require to be able to fulfill its promise? And then that starts getting you thinking about the economic model that can support that kind of valuation and so forth. So that's the structured and strategic approach that's needed to be able to start that process of fundraising in a way that's very, very intelligent, right? Very strategic.
So this is way deeper than just the idea of accessing capital
Yeah.
and finding money, because
Yeah,
that school of thinking around, okay, we need some capital. You've got to kind of think like an investor, I'm hearing you saying.
completely,
How does
completely.
an investor think, Henry?
So it's very simple. It's basically the translating your vision into the corresponding economic model, right? There, it's return imperative on their side. So if I put $1 in, how much am I getting out? Right. So it doesn't matter the industry, it doesn't matter if it's a restaurant or it's a fintech company, it's an economic engine. And for them, it's a return engine, right? So based on the structure of your business, it's really being able to take a look at 20 different deals and look at the 20 different economic model. And again, something that's a bit tough for founders because again, founders, we're attached to the project, we're attached to the mission and so forth, but these things are completely irrelevant in terms of returns as well too. Investors are trying to figure out that return sort of formula. What's the multiplier? And not only that is your ability to be able to continue to raise money later on, right? Which is also very important because each valuation, or at least each round, crystallizes the new valuation. So if you're not able to raise money, that's a big issue. So from that perspective, is like, look, do I understand the economic structure of your business? Is it sound, right? Is it based and is grounded on good assumptions about the world? Does the economic engine, and will you keep be able to secure more funding down the line? And that allows me as an investor to calculate my return, right? What are the realistic sort of return profile of the proposition? So that's super important. And then also what's very important is that you're being judged the same time as the business is, right? As a founder. So everything from why are you raising money? How much money are you raising? Why are you raising that much, right? Is it because you're trying to not fundraise for 3 years? Or did you determine the optimal amount you needed to raise in order to reach specific milestones in your company? Stuff like that. So it's very important to realize that as a founder, you're being judged for all the decision, how you've assembled the team and so forth. So it's kind of like that test. And once you understand that perspective, it forces you to rethink how you're pitching and how you're presenting this model to potential investors.
Wow. So this ties right back to those, and it sounds like it's basic, right? But for a lot of us who are on this call, we understand much of what you just said in terms of
Yeah.
sort of how do we actually prepare ourselves? Because as we think about access to capital and think about sort of that process, you said
Hmm.
something about that capital procurement process, and it's almost like at a preparation stage
Yeah.
for you to understand that as a founder.
Hmm.
Walk us through that capital procurement process step by step, if you may, as we get ready to say, let's put our first pitch in front of a investor, or even before you get the pitch, what do you tell people before they come to you?
Well, there's a couple of things. It's a matchmaking process, right? Most of the money out there is the wrong money for you, right? It's tied to the wrong investors, maybe with wrong understanding and so forth. So what you want to do is understanding that matchmaking process and be okay with discriminating against most money as not being strategically valuable for you, right? So the first thing is understanding it's like dating, right? You're looking for that match. So that's the number one thing. A lot of people, they'll go through the process, they'll have 100 meetings, and they'll be very, very demoralized or distraught at the fact that things are not necessarily materialized. And most of these meetings are you could see it's just practice in a sense as well too. But it's important to understand you need to be very, very, very aware that this is a matchmaking process and most money. So the process is really identifying from the signals also you're getting from the investors, are they the right partners for your project based on your missions, based on even their network, the rest of their portfolio? Are there any potential synergies with other their portfolio assets and so forth? So that's number one. The second thing is understanding just your job. You will need to line up several rounds, right? In most cases. So able to understand that you need to be very strategic in your first round. First round is always the most expensive in terms of equity you have to do. And just how well or badly you do in terms setting favorable terms for you will set the precedent for whatever happens down the line. I've seen incredible projects with very, very passionate founders. 7 years later, they have, 10% or they get fired for the company as well too, because the initial rounds were so aggressive that within three rounds, they lost complete control of, first of all, the business, but also their ability to deliver on the mission that really compelled them initially. So the first thing is understanding it's the matchmaking. So being very, very rigorous about allowing people in and really being attentive to the signals they share about their ability to add value beyond, extra financial value. And the second thing is also guarding that equity by understanding the capital requirements and raising the minimum amount of money that will make a valuation difference for you. So it's not just, oh, I hate fundraising. How much money would I need to be able to operate for 2 years without another round? No, 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 no. This is such an expensive process. You need to determine this lowest amount of money you need to raise to be able to achieve your, let's say, trigger certain valuation milestones, right? So it's a completely different approach than as first time founders you implement to be able to secure capital.
And then if you have a project, so if I have a project and it's, I've
Mhm.
got a restaurant project or a real estate project that
Yeah.
I'm working on, or I'm raising funds for any number of reasons, and I'm not thinking about it, say the way as a startup might be thinking about it. How should we be thinking about those same things? Are the principles the same, whether you are starting something up from ground zero or you're just working on a project, expanding a project? I need capital
Mhm.
to work on an export project. I've got some
Yeah.
exports that I need to do to Colombia or to South Africa. I'm in the business of wine. I see someone in the business of wine that's on the
Yeah.
call. People are in real estate. How should they be thinking about this? Is it the same way? Is it the same thinking that needs to be applied here?
Well, no. So that's why the exercise of doing the capital requirement analysis is so important because from the number you're going to be able to derive, that's going to tell you even where you should be raising capital. Do you need to raise capital? Can you capitalize your company through revenues or other alternative? There's a lot of grants program and so forth. So the first thing is understanding again, projecting down the line, how much capital? Is it 100 million that you need, right, to capitalize, or is it 5 million and so forth? So 100 millions will get you into an understanding of, well, am I even in an environment where I can raise 100 million, right? You're like, well, probably not, maybe. So even this is deciding where to go fundraise, that will have an impact, but also in terms of what kind of economic model do I need for my business to be able to allow me to access that kind of capital. So that gets you into the valuation model, right? How can I if I'm looking at the business I'm trying to launch, if it's a restaurant, for example, then one restaurant you're not going to be able to get. But then maybe you start talking about franchises and standardizing processes and having a centralized and decentralized model for that and leveraging data where now you're able to make every decision like a Starbucks would, right? As far as where to operate and so forth. And then from that, you're like, well, with that model, I could raise $100 million. So the first thing is understanding that capital requirement and that will help you guide every decision you need to along the way. And even if it's saying, well, we don't have the right business model, at that point you'll be able to understand that.
Yeah, and thanks for sharing that. So now that we've kind of set that tone for what you need to be thinking about as you look at accessing capital to finance global projects, regardless of what it is, there's some baseline thinking that has to be applied ahead. So we're going to now assume that those things are in place, Henry.
Yeah,
Assume that you've got those capital procurement process in place. You've
yeah,
got that the experience, you've got the background, you've got all that you actually need.
yeah.
So now it's time to actually present this, put this in front of folks. Where do you find capital to finance your projects? Where did that come from?
So there's two things. And just before I get into that, I would say second step as far as the capital requirements is very important to understand what you'll use the money for. All right. So understanding, it's not just 100 million, a lot of it you'll spend on talent and so forth. And the second part of that exercise is seeing how can you finance those different assets, maybe without using venture capital. And I'll give you an example. So for a lot of, I mentioned that we work with universities, we do work with a lot of universities, and most people don't know that, but most universities are incredible partners, potential partners for founders because they're looking for tangible product for a lot of their student population to partake in. They have resources, they have money as well too. And we've seen instances where tech intensive companies that we've partnered with were able to get commitments from university, for example, 5 years of R&D with 30 plus PhDs working on their product roadmap. So that's a multi-million dollars in terms of investment. They were non-dilutive, no equity exchange. They were able to get with universities. So again, most founders, because of the constraints, because of the difficulty of capital availability and so forth, that path of just showing up and getting money is very unlikely. But once you understand what resources you need, there's so many partnerships that can be mobilized to give you access to those resources. And the other thing why this is extremely important, it signals to investors how creative you are in cultivating as much momentum in the most efficient way. So again, that single mom from Kansas, right, is really sort of at a disadvantage because the perception is that that might not be a winning vehicle because we're unfamiliar with that package. But if she's able to demonstrate that she was able to tap into those resources, it signals that obviously highly intelligent, highly resourceful, and will be able to protect the equity of the company by continuing having a lot of these. So that's the second thing. With regards to finding these investors, it's a lot of research, right? You have to have an understanding of what is the profile of investors that will be value adding, could be in terms of, again, domain expertise. They're deploying capital in areas that are very, and obviously we're looking now with the internet, there's so much data in terms of each funds, each family offices, investment thesis, their existing portfolio. So what you're trying to do is match that against your ideal profile of what you need to get financially, but also these extra financial sort of value, and then just going through those analysis and reaching out. That information also will help you craft the right engagement strategy by being able to translate that portfolio strategy, that portfolio thesis into something you think will be as compelling as possible for them to understand the value investing in your project will have for their portfolio and their return goals.
Wow, wow, wonderful. Well, ladies and gentlemen, just before we continue, please keep your microphone on mute. This session has been recorded. It will be available on YouTube later. Please don't forget to follow us on YouTube. The Atlanta Black Chamber is aiming to get to 1,000 subscribers on YouTube. Please go over there when you get a moment and show us some love. Get us to 1,000 over there. There's also the Global Opportunities Committee YouTube channel that we're coming right up to get 1,000 as well. But they're there first, so let's help them to cross the finish line and follow us anywhere on social as well. Henry, this is really, really powerful, and I love having these conversations because I think these are stuff that we don't think about. We don't think about daily. I do want to kind of just step away a little bit, and I think Sheldon is here. Sheldon Mundell is or spotlight this week from a company that he created called Mentorado, and I'll let him explain it. But I'm connecting the dots between a lot of what you just said and a lot of what I know Sheldon is building in the back end in terms of allowing businesses to assess their capabilities, their abilities, really, competencies, etc., to be able to go after capital. So I think there's an intrinsic connection, obviously, between the access to capital that people can actually have. We always say there's a lot of money out there. The question is whether or not you are actually getting it. And
Yeah.
there are these distinction between who gets it and who doesn't. Sheldon, welcome to the Power Hour. Good morning. Tell us who you are. You're being spotlighted as a GOC member. You've come into the chamber recently. Tell us a little bit about your background and also the business that you're operating today.
Great. Thank you. Good morning. It's a
Mhm.
pleasure to be here. Yes, I was very intrigued with what you're saying, Henry. I see the dovetail in what I'm trying to build and the lessons you shared.
Mhm.
So quickly about me and my background, I've been in technology. I like to say 2 decades, but now it's 3 decades. It's crazy. How time flies. And in that time, I've led organizations, large organizations, the big four, technology leaders at scale. And what's happening now, with what I'm observing, is that running small business is hard. They don't have the resources of the larger companies. And, you got to sell, you have to lead, you have to manage finances, manage teams. And you have to now be an AI expert. If you're not catching up on AI,
Mhm.
you're at a strict disadvantage. So that's why Mentorado was created. It was created to help the small business who don't have the resources of the big guys compete. And the way it works is it first starts by assessing the level you are. Are you
Mhm.
novice or just a brand new to business?
Mhm.
Are you in the middle or are you an expert small business operator, which is different than maybe being in corporate, right? So it assesses where you are, what stage, and then it does an assessment to provide a scorecard of your competencies in different areas, such as finance,
Mhm.
technology, leadership, talent, innovation, marketing, and customer experience. There's 7 competencies. So when I was listening to you, I was looking to ether, Henry, and I saw some connections there.
Yeah.
And then after assessing the score, we've built in an AI chat called Prosper that we continue to refine. We need people on it to refine it,
Mhm.
especially in our community to avoid bias.
Mm-hmm.
based on where you are in zip codes and stuff like that.
Yeah.
So we have an AI chat called Prosper that looks at the assessment and now it engages you because it has context. It provides personalized information
Mm-hmm.
specific to you, which is different than you just going out to AI and hoping you're a good prompter, right?
Yeah. Mm-hmm.
And then after that, it provides action plans and what we call pathways to help guide you to what you need to do and work on a weekly or daily basis. So
Mm.
what we're describing, what we want Mentor to be is to be a hub to help you operate your small business, leveraging AI tools, personalized for you. And we keep releasing iterations every 2 weeks. Well, now it's every 2 weeks. It used to be every week.
Yeah.
We're getting feedback and we're adjusting to help the small business owner. Um, we want to make you thrive. We just don't want you
Yeah.
surviving and limping
Yeah.
along,
Yeah.
but how do you thrive using modern tools? So that's Mentor in a nutshell.
So I
Wow,
think
that's
And
incredible.
and I want to add, we're going to provide a special code to all GOC folks where you'll get access to this for the rest of the year for free. So
Wow. Yeah, that's incredible.
and
thank you.
thank you, Sheldon, for sharing that. So obviously, what I'm hearing is that Mentorado AI can actually help you to shed some light and some insight on kind of where you are from a competency standpoint. And you're actually offering all of us who are on this call an opportunity to get those insights, even if you might think some of the things that I've heard in my journey is that sometimes the people who think they know everything aren't the best set of people to actually work with. So you have to kind of stay humble, remain humble. And I think maybe, what you're saying, what I'm hearing is that Mentorado kind of helps you to stay humble as well, right? Sort of get in there and kind of
Mm-hmm.
see exactly what is actually going on, because you need to understand your readiness for capital. You need to understand the layers of competencies that you actually need to blend together to be attractive in the end. You need to understand how investors are actually thinking, and that will give you perspective if you understand yourself.
Mm-hmm.
And that's what you're saying that Mentorado does. Am I getting that right, Sheldon?
Oh, absolutely, Ricardo. And the more I spend time with you and your network, it's becoming more evident of those challenges. And we
Yeah.
face the same challenges too, going out to raise funds and get the rest. How investor ready are we? So that's a huge part of it. So listening to Henry and dropping those gems you did, Henry,
Mm-hmm.
the tools cater to help that the small business prop up to get the capital to grow, which a
Yeah.
lot of us struggle with. You know, most small businesses just they get to a plateau and then they just stay flat.
Yeah. It's great data to get for the founders because again, as founders, you're in the lab, right? So your perspective is very narrow as far as, what you need and even some of the things that you need to acquire and learn to be able to have a fair chance. So having that sounding board able to give you that baseline and obviously make recommendation as far as areas you need to double out on,
Right.
that's essential. That's so necessary. And again, if you still study the failures of startup, the tragedy is that most of those failures are avoidable.
Yep.
Right? You see tremendously inspired human being with great ideas and great expertise, but short of having certain retweaks in terms of outlooks and the execution, it doesn't have to be that way, right? So exactly what you're doing is so necessary and such a difference maker in allowing these outcomes to be completely different. It's outstanding, right? It's outstanding. So yeah, well done on that.
Thank you. That's the goal. Yep.
Yeah,
And
yeah.
Sheldon, you talked about seven of them. Can you tell us a little bit about the seven? What can you name them again for us? You mentioned there are seven.
Yes.
There's that. Can you tell us
Yeah.
what they are?
I will. I slow down. Maybe I had too much
Mhm.
coffee. So there's finance, assessment in finance. There's customer experience. A lot of us focus just on marketing. So there's a customer experience separate from the marketing. There is how well do you manage technology? Some of the
Mhm.
basics aren't there and it wipes out folks. How well are you in innovation? I like to use the example that you may have a hot t-shirt, but did you get the hat, the sweater, the shoes? If you don't innovate, you stay flat, right?
Yeah, yeah, yeah.
There's leadership management. How well are you as a leader? Especially once you start to add folks. As a solopreneur, I may not feel that much, but managing leadership. And the last is talent management. Even if it's not in your organization where as an employee, but sometimes you have contractors and you still have to manage them. So
Mhm.
I think that's all seven.
Hmm.
Finance,
So that's
customer
finance,
experience,
customer experience, technology, innovation, leadership, and management and
marketing, yes.
talent. You say talent as well?
Talent management and marketing, yes. So that's a
Mhm.
seven. And then you get an overall score, a weighted score across of all of this, depending, the score adjusts based on your location, where you are in the world, and because
Hmm.
there's different factors, and also the
Hmm.
size of your company and where you are, what stage you are. I mentioned
Yeah.
the three stages. Are you just starting out? Are you a mid-level operator? Or are you very experienced? And we benchmark that as well. We need more data. We need more users.
Hmm.
It's iterative. It is software, folks. You jump in there, you don't like, send a note to support. I don't like the font. I don't care what it is. Send feedback, and in 2 weeks we try and prioritize and update it. So it's a pleasure to partner with you. And ABC. Melvin's also very supportive, and Henry, hope to have some continued discussions.
Yeah, absolutely. Absolutely. Would love that. Yeah.
Thank you. That's pretty awesome. So, guys, please, Sheldon, share the link again in the chat.
Yeah.
Please give it a shot. Test it out. See if this is something that would be a good fit, because this is a setup for the capital raise conversation that you're going to then have. Because
Mhm.
believe it or not, your investors, as you port into their head, we always say, you've got to have a sketch of the ideal investor that you're looking to work with. You got to get into their head, and they're going to ask you these questions. Who's on your team,
Yeah.
what going to ask you about these competencies, and you better have good answers, because sometimes you have to deliver those answers on an elevator going up to the 10th floor, because if
Hmm.
you miss that opportunity, you miss your shot, and there's no better time to make a first impression than the first time, because
Yeah.
you cannot make it a second time. Some quick
Hmm.
other announcement, because I want to touching on some other topics before we jump off. And guys, if you have any questions for Henry, based on what you've heard so far, please put them in the chat. You can raise your hand. Coming up in another 6 or so minutes, we'll take some questions for Henry. But I did want to let you know that the Global Opportunities Committee, we are actually going to West Africa, Nigeria, Ghana, and Liberia in March of 2026. One of the things that we like to be able to do, as we say, connecting people to opportunities, and obviously opportunities to capital, is to take you there, get you out of your comfort zone, wherever in the world you are. If you've never been into these jurisdictions before, even if you have, there's no better time than to actually go again. So we're inviting you to express your interest. If you'd like to go on this trip with us, this is scheduled for March 9th to the 22nd. So we're going to be doing these country hops, but most importantly, connect you to opportunities that are on the ground, and connecting those opportunities to potential capital and partnership. So Henry, what one other thing I wanted to ask you is, do I give myself a role in this process of accessing acquiring capital, as a founder or as the CEO for my company?
Yeah.
Uh, what role should I give myself at this particular point? Should I be the head cook and bottle washer, or
Yeah.
should I just be focused on just raising funds? Like, can you talk to me about how do I, streamline these roles if I'm the only one, or, is there a problem if I'm the only one running my company? Do I need a partner? Can you talk a little bit about that piece in terms of structure?
Yeah. So yes, ideally, as you're getting ready to receive money and the responsibility that comes with it, you should have a team in an ideal scenario that covers all the bases, whether it's a technical co-founder, someone with great background, and it's almost impossible for one person to be able to be as qualified and competent in doing all this. But the advantage, and that's also very, very important. The only time in the history of the company that you're going to be able to have your hands in all the different pots is, at the beginning, right? And it's so important because I always say you're not building a business, you're building yourself, right? Through those experiments, you're getting a good understanding of, your strengths and weaknesses and so forth. So it is a very intense process, but it's super important because if you're able to immerse yourself in all those different departments and different responsibilities, and basically running the entire kitchen, you get a very unique perspective on the business. And later on, as you onboard collaborators, you will have a perspective to be able to guide them as well too, right? So it's a privileged time in the first year, first 2 years, where you do have to do everything to acquire as many skills along the way, then translate into the CEO visionary, able to go in department to department and impart wisdom about the direction. The other thing that's very important is that, again, speaking of that experiment in the lab, you need to go out there, right, and see how your theories and your hypothesis match and the reality out there. So things like fundraising, you should see them as exercise, training exercise, right? How are you able to talk to 100 different people with different perspective, different imperatives, and translate that vision that is so compelling and clear to you in a way that's translated and accessible for all these individuals? So that's another part of a CEO that you need to train on, right? Being able, whether it's convincing investors and mobilizing them, but also recruiting the people that you might not necessarily be able to afford, but through your ability to convey your mission, you might be able to get in as advisors, equity owners and so forth. So you have to sell. Part of the CEO is to be able to sell, and going into a very sometimes hostile audience like investors who are in a large part, if you come from a different background, they're trying to rationalize why not to invest in you, right? So very hostile environment, and being able to manage those situations, manage the negativity as well too, right? That you're feeling in those questions where you're being sort of challenged on even why are you doing this and so forth. It's such an incredible training process. I wish it to everybody. So yeah, it's very important to be beginning to be involved in as many facets of the businesses as possible and see them as part of your job, right? It's doing business, right? It's not just being at home and coding. No, attending networking events, attending, pitch session, seeing all these, that's part of your business as well. That's part of your job. So becoming proficient at it is extremely doable, but it's necessary.
Yeah, no, thank you, Henry. And I want to commend you because as someone who is obviously aligned with us culturally, you look like us, you're a black business owner, you're a black investor,
Mhm.
for you to be able to reach the heights that you are, and I think you're somewhere what in the region of was it 100 million? What's the number that you're working
Yeah.
with these days as the head of your organization?
Yeah, so basically, obviously, we've done a lot. We've done over $250 million of deployment and capital sort of management. Now we're working on something much bigger with the Economic Institute. I was talking about what we're doing in the Middle East as well too. We're always going to be global, and that was basically since day one. That was the vision, the global aspect. But it also required the awareness of what our starting point was, right? We were able to, build this because we were aware that it wasn't going to be easy for us, right? When basically we didn't have any illusion of saying, oh, well, it happened, something like this happened for someone else. Let us just copy that same playbook. We understood what we had to work against and figure out a way to be able to build something very unique, right? If you look at their trajectory and what we've done over 20 years, but it was adapted to our reality. And my reality being, first generation Canadian, with access to some network, but still having to overcome a lot of things. But because I knew that from the get-go, was able to build something that really allowed us to ascend, but in a way that was very adapted to our reality and what we had access to.
Yeah, no, that's powerful. And ladies and gentlemen, if you have any questions for Henry, please raise your hand. We're going to start taking them now, or you can throw them into the chat if you'd like to get some insight from him. So Henry, where is the best, if you may, where are the most ideal places now? If folks who are listening who are on the call is some of us are in Atlanta, some people are in other parts of the world. I saw someone from Germany just join.
Mhm.
And we're encourage everybody to go global from where they are. Where are some of the places that you think capital is being deployed now geographically, and why?
Well, there's great incentives and program everywhere, right? There's places like Luxembourg where they'll match a lot of the funding because again, these a lot of environment thankfully now are seeing entrepreneurship as the trying to transition to more of a knowledge based economies and try to attract and become convergence points for a lot of founders. So there's a lot of even in Qatar last year they announced the Qatar Investment Authority. They created $1 billion fund for funds, right? A fund of funds. Similar things happen everywhere from Portugal, even in Canada. You do have a lot of credits on R&D as well too. So there's a lot of resource everywhere, but what I would actually recommend to everybody is start traveling and start exploring. It doesn't have to be physical, right? It could just be attending networking event online, virtually, and different things, connecting with economic development offices to see what's the vision for their community. Most of them have, 5-year, 10-year, 20-year plan with a focus on certain industries and who they want to bring and so forth. And the reason why this is also very important is that as a founder, it gives you so many different perspectives to pitch, and understanding that, it's a big world out there. The best thing we've done is leave Canada, right? Because in Canada, we're getting very, very, I would say, different feeling about the potential of what we were building than we thought, right? We thought there was a disconnect between what people thought was realistic for us and what we believed to be achievable. And when we went to the United States, it was like a breath of fresh air because it was so different. The feedback we were getting, and we're like, wow, we're onto something, right? We're able to do a lot of great collaboration, work with big companies and so forth. And then same process happened when we took the show and went to Europe and so forth. So the big thing, and maybe one of the most energizing thing you could do as a founder, is go outside your backyard and test how your pitch resonates with people around the world. And you'll be very surprised sometimes with the feedback you're getting. Again, like I said, when we're in Canada, the signals we were receiving were almost basically, you should stop. You should stop. This is not viable. And just crossing over to the US, it was like, wow, you guys are the best. We've never heard anything like this, right? So that was interesting. But we had a feeling that it wasn't our model that was wrong. It's just people weren't receptive to it. So if we exported it somewhere, we would find different markets. So that's something I would recommend to everybody. Travel and go out. And you might be very, very surprised at some of the opportunities that will line up for you if you do that.
Yeah, that's why a network like the GOC is so important, because you get to travel virtually and you get to connect with people and get perspective
Yeah.
across different geospace. We've dropped the poll in the chat, guys. The poll is up. We'd love for you to participate. Give us some perspective as to how you're thinking about this. And since we have done such a good job in not, having any questions, we always kind of like that. It feels like we've really done our homework. So you don't have any questions, which is awesome.
Mhm.
But Henry, what is it that I'm not asking you that you need to tell us today?
Uh, I think we've covered good bases. Again, what I would stress to every founders is, really understand what you're trying to do. It should be personal, right? It should be a mission that you're carrying and so forth. So I would say be very, very mindful of the change you want to cultivate through your business, right? It's the business is almost a pretext to actualize, right? And to be able to accomplish your mission, your destiny, and so forth. So I'd say make this very personal in terms of the mission. And the second thing as well, too, I would always say, and I always tell founders, as you pitch, right? Um, and you talk to a lot of investors, you might even talk to your family and so forth. It's imperative that you contextualize who you're talking to, not just listening to what they're saying, because I've seen founders pivot 100 times their businesses because of 100 meetings, right? And not really analyzing the feedback they're getting. Is it valuable? Why is this person, saying that and so forth and so forth? And sometimes investors are just trying to get rid of you. So they'll point out everything that's wrong about your project to rationalize the fact that they're not interested in going forward. But if you take on that information, that feedback, and pivot because of that, you're basically destroying your business, right? It's a very personal project. So you need to be defined as well too in your commitment to it, but really contextualize what you're getting from those individuals. So it's tough. There's no other way to do it. It's, even when it gets tough, it's not because you're doing something wrong. And so there's no other way. Those fairy tales of companies going from, zero to a billion, they're not true. And usually when they are, is because someone's, relative was writing a big check or something. There's a scheme going on there. So I would say, keep, enduring, but really understanding why you're doing it, because you're the biggest fuel and the biggest predictor of success for your project is just your level of commitment, passion, integrity, and so forth and so forth. So make it a very personal journey, understanding why you're doing it, right? Well, understanding how much of yourself do you infuse in it, right? All your skills, all your passions and so forth. And be very, very mindful of contextualizing the feedback you're getting from people, right? I've done meetings with very, very funny, but, I've done meeting with investors that, spend the entire meeting trashing, a business model. And then after they've learned, after I've shared, some of the people that had committed, they basically admitted that they weren't expert in my business model, right? And they were like, oh, well, actually, I'm not an expert in that product. So it's like, well, you spent all meeting trashing it like an expert, right? Saying that it couldn't work. But once I was basically able to share, no, actually, I don't need your money. I've already committed. And once they've heard who had committed and bought in, they were like, well, actually, I'm not an expert. So again, you have to be able to understand and translate a lot of what you're getting to be able to, again, discriminate a lot of the information you're getting and really being committed on your vision and keep working and keep adding. And that's the outcome. That's a positive outcome. You bettering yourself, bettering your skills, getting a better understanding of even how you work, your strengths and weaknesses, and polishing yourself. So there's absolutely no way you can lose with that perspective.
Fantastic. This was lovely. And we're about to wrap the poll up, folks. We got 35% of you participated so far. If you would love to get that number up to 50 or so, if you can, go ahead and tell us a little bit about your thoughts on this. So Henry, we've got 72% of people so far before I share the poll result that have not raised capital in the past, but they are
Mhm.
interested in raising capital. So would love to kind of have your advice to those people. There 32% said that they have actually raised. Strategic partnership is coming up as one of the ways that they have seen, founders
Mhm.
really accessing capital through partnering with others. Talk to us a little bit about, or talk to those people
Yeah.
who is looking to get into the capital raise game. They haven't raised anything yet. This would be their first time.
Yeah. So yeah, it's going to be a fun exercise for those individuals trying to get to. But I would say the number one thing, think of your business from the perspective of an investor. What's in it for the investor, right? If they're so start looking at that calculus, right, of how much money they're putting in, what are the terms, and what realistic can they expect? What case can you make to substantiate that as well, right? Because as founder, the one thing we're doing all the time is you're merely trying to survive. So you're like, look, you'll pursue everything, every leads and so forth and so forth. But you need to extract yourself from that mindset and think from an investor perspective. You put on the other side, why would they invest in your business, right? And that forces you to think more on the economic and the returns that you're. So, what is the case for getting $100,000 in the company and then netting $1 million, right? You're talking about just a 10x. How can what you're presenting make that? Because these are the things that obviously investors won't tell you as far as what they're thinking, but this is what they're calculating, right? What's the likelihood that you're going to be raising at a 10 times valuation next year? And they'll ask guiding questions and they'll try to figure out, okay, so when's the next round, right? What are the terms? And this is just to be able to understand the trajectory of returns of the company. And so if you don't have those answers, or you're like, well, you know what, I won't need to raise again, these are bad answers, right? So you need to think from an investor's perspective and figure out what is it about my proposition that makes it very realistic and highly probable that I will achieve those things. So that's also very important. And what I was talking before as well too is that you need to guard your equity, with everything, right? The amount of equity you still have at the end will determine, are you able to fulfill your mission? Are you still in control and so forth? So there needs to be a logic of how much money you're raising, right? Is it 25,000? Is it 25 million and so forth? They should be, because it's going to be the most expensive round. There should be an understanding of raising the minimum amount of money to be able to get you to the next stage and next plateau evaluation. So determining these investments, I need 250,000 because I've determined that we need to invest in the tech to be able to reach a certain level of automation and so forth. And the cost for that, the price tag for that is going to be 250,000. But having achieved that and delivered that to our audience, our valuation is going to go from 5 million to $15 million. So that makes sense, right? That makes sense. So really understanding the logic of your ask from an investor perspective. That's critical.
Yeah, no, thank you, Henry. And I was thinking of something here, and I know, you are an advisor to myself and to what we're building,
Mhm.
which is something that we're extremely grateful for. And
Mhm.
I'm thinking that one of the things that we are doing as we're building this Go Global ecosystem community, we need to actually show you, we need to show people what we're doing and how we're actually building it. And maybe from zero to wherever we need to take it. And I'd love to challenge you to kind of be on this journey with me and with us, just to demonstrate to people what we're actually doing and how we're implementing some of these thinking. Because it's easy for something to come through one ears and fly through the next.
Yeah.
Application isn't there. Like we get up daily and we hear these things, we see these things, but with the real application. So we're going to be launching shortly on building the Go Global ecosystem, which is going to be something that we'll do right after the Power Hour. And we're going to use that window to talk about how we're actually building the ecosystem, we're raising capital, and how we're going to do that, and so forth and so on, so that you can have that real life experience and you can apply these things, these tactics, to put into your own business. We're going to end the poll, and the results are out. And we see here that there is still more conversation that we need to have about how we actually do this. We see that finance is a huge thing, Henry, for the competency challenge. And you know, in as we wrap up, your final advice to folks as you look at sort of the results here. Do we all need to take courses in finance? Do we need to go get a degree in finance to really sort of understand how to build competencies in this specific area? But your final advice and feedback for those who are on the call, who are looking to then access this capital out there.
Yeah, like I said, really put yourself in the shoes of an investor, right? Especially if you've determined that, venture capital is going to be a necessity for to accelerate your growth. And so, because all business models do not necessarily need that. There's a lot of other source of capital that are available. So that's one. But if you do need to convince and mobilize investors, you absolutely need to translate what is the most valuable about your company in a way that's going to translate and resonate with those individuals that do not care about your mission, right? Their business is not to care about the change you want to cultivate, is to make money for their investors, for their limited partners. So that's probably the most valuable thing. It's kind of like what you sell anything. You have to put yourself in the position of your audience, the stakeholders, your clients, and so forth. And that's something that's not often done when you're talking to investors. You think, oh, well, I have the same standardized pitch. We've done stuff where 100 investors got 100 variations of the same some project because it was catered to their profile and their expectations. And that was really good, right? So, and the more of that information you're able to share, the greater the chance for investors to see if they're the right fit for you as well. So really extract yourself from the day-to-day survival and transpose and translate into that investor perspective, and you will see a massive difference into the feedback you're getting and the support you're getting from those conversations.
All right, awesome, awesome, Henry. This was amazing, and I know people
Mhm.
are going to want to connect and contact you. And we like to say, if you're more than maybe about half of you shows based on the result that you're not yet a member of the chamber, join the network, be a part of the community, because this is how we do what we actually do. We would love to hear how we're doing, how we can improve, or conversations with experts like Henry. And if you're interested in connecting with Henry, we will connect you with Henry, because you are part of what we're actually doing. And we have to, obviously, Henry is a busy guy. We have to guardrail him, but as you are a GOC member, ABC member, we'll make sure that you get access to Henry. But get ready, be prepared, because we don't want to just have bounce ideas and have conversation. It's time to go beyond that and go into the real execution. And
Yeah.
big shout out to Dr. Nicholas Harvey, because he's put together also an investor readiness kind of program. So if you are also wanting to check, guy, we have some of these amazing resources that I don't know that we've taken full advantage of. And a lot of times it's a way to get in there. So we heard from Sheldon, who we spotlighted this week. Make sure you check out Mentorado. But then I see Nicholas Harvey is also sharing the opportunity for you to understand, are you actually investor ready? A lot of these conversations that you've heard us having, it really is a factor of whether or not you're actually ready for the capital that you say you need. Because trust me, you're gonna get grilled, you're gonna get drilled, you're
Mhm.
gonna get poked, and you may feel like you want to just cry, because it can be extremely tough, emotional. So it's a lot of lashback. But
Yeah.
if you are ready, there is no issue. So Sheldon, thank you for coming through today. Henry, thank you so much for coming. Ladies and
Absolute
gentlemen, the
pleasure.
hour has come, but the power continues. The power is within you to keep that conversation going and tap into the resources that you need. We'll see you again next week, same time, same place. This next week, we're actually having a mixer. So if you're in Atlanta, if you're coming in town, GOC has an in-person mixer. That information was shared in the chat as well. Feel free. We'd love to shake your hand. We'd love to connect with you, and we'd love to chat more. That's actually on the 5th of November, I think it is. It was shared in the chat. Please, it's free, so you can come out and connect with us. Yes, that's the 5th of November from 4 to 7. That's actually happening out there at the Kimball International Showroom. Great showroom for one of our members who is into that business. So feel free to check it out. So have a great day, everyone. Thank you guys so much. We will definitely see you
Thank you.
next week, same time, same place. Enjoy the rest of your afternoon and your morning.
Thank you, everybody. Yeah. Keep up the good work. Talk soon. Ciao.
Thank you. Thank you, Henry.